Are you or your clients looking for a regular income solution with compelling returns to diversify your portfolio? If so, Neighborhood Holdings may be a great option for you. Listeners of this podcast will appreciate that public markets can be turbulent and finding a good private credit fund can be tough. But Neighborhood's track record, transparency, and investor alignment sets it apart from the pack. With nearly 10 years of consistent performance and a target net yield of 8 to 10%, Neighborhood has a track record of providing monthly income to investors without the volatility of public markets. How do they do this? Where banks invest in mortgages up to 95% loan to value, they also make borrowers jump through a lot of hoops. Many borrowers in transition aren't able to meet those hoops. Neighborhood has partnered with banks and brokers to provide quality borrowers with temporary financing secured by first mortgages at an average loan to value of less than 60%. Where other mortgage funds might take more risk by lending against construction, bare land, or jumbo loans, Neighborhood is focused on your average residential borrower who owns the average house in the neighborhood. Plus, their variable rate with a floor mortgage pricing benefits investors when interest rates go up and mitigates downside risk. Check out the link in the description or visit neighborhoodholdings.com to view the offering memorandum or speak to your financial advisor for more information. That's neighborhoodholdings.com/Loonie Hour. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin. Hey, there's a bubble.
Welcome back to the Loonie Hour, episode 181. As always, joined by the three amigos. We got the Boomer, Pete Dicker, IceCap Asset Management, Rich Diaz. Rich, where are you now?
Me? I'm in Austin, Texas.
Oh, traitor.
Boo. Yes,
You Trumper. Keep your elbows up over there.
I'm walking around like this with my elbows up, and any American that comes close to me, I just poke them a little bit just to let them know we're here. No, I'm not doing that. That's a stupid thing to say and do. I'm visiting one of my best friends who's Canadian, by the way, and works here. And yeah, lovely.
Sounds like another Canadian I know.
Also not paying for a hotel. Everybody thinks I'm rich. I'm not, Keith. But no, it's great. It's nice to have friends. When you work abroad, you have friends who live abroad. And so it's nice to just go and pop in and say hi, keep them company. Because, yeah. So that's it.
Boomer?
Well, what you're saying, if you live domestically, don't go anywhere, your friends are narrow.
I get, yes.
That makes no sense at all. So, Rich, you've been warned not to travel to the U.S.
That's right. I have been warned.
Yeah, a number of people, the CBC has warned you, and you shared with me some of your close friends and family suggested you shouldn't
Someone
go.
who's very close family member has told me.
Yeah, absolutely.
Hey.
And but wait. Why don't you share what the second leg is of your trip and how many people have warned you about that?
Oh, yes. So this weekend, we're flying to Guadalajara. And precisely 0 people have warned me about going into one of the most dangerous states in North America, which I thought was very, very funny. Actually, no, I lied. The only person who raised an eyebrow, I was like, why are you going to Guadalajara? Was the U.S. border guard when I was leaving Canada, because you do customs in Montreal. And he's like, where are you going? So I told him the whole trip. He's like, why are you going to Guadalajara? That's very dangerous. And I was like, interesting, you should say that. So there you go. That's the story.
Why are you going there?
Because my friend who lives in Mexico is having his 40th. Him and his wife actually are turning 40 within a couple of days. And so all the friends are congregating to do the tequila train. So you may never hear from me again. It may be because I'm kidnapped. It may be because I fell off the tequila train. Who knows?
181 episodes. Been a good run.
Yeah, it has been a good run.
One of my favorite movies is called We Are the Millers. I don't know if you guys have seen
that. I've seen that one.
Yeah, it's good. But one of my favorite lines from it is, they're trying to go into Mexico to get something, and they cross the border, they get in, they go in the middle of the night, and I forget the guy. Who's the star? I think it was the Ted Lasso guy.
Yeah, he's great.
I don't know his name.
Bateman, I think.
Is it him?
Jason Bateman? No, maybe not him.
No.
Anyway,
I know who it is. Anyways, continue.
Yeah. Anyway, they go across, and he goes, "Yeah, we did it." And Jennifer Aniston says, "Congratulations, you snuck into Mexico." Get it? Okay.
I get
Okay.
it.
That was-
So we have no humor with today's Loonie Hour preamble. Steve, what do
Wow.
you? I think you do have some humor actually coming
we
up.
Oh yeah,
do.
no, well, we'll get to that. But speaking of Rich's travel plans, there was a note here: air travel between the U.S. and Canada drops sharply. So flight bookings between Canada and the U.S. are collapsing, according to airline data provider OAG. Compared to this time last year, bookings are down over 70% every month through the end of September, according to the firm's analysis. Canada is typically the top source of international visitors to the United States. This sharp drop suggests that travelers are holding off on making reservations, likely due to ongoing uncertainty surrounding the border trade dispute, says OAG. So Rich is one of the few that's slipping through the border there.
I could tell you I was not alone on my flight to Detroit.
Yeah, I mean, it's yeah. I mean,
my comment is from the OAG data is OMG.
Oh, God.
yeah, that's yeah. Anyway, that was a good one. All right, well,
But what I'm curious about, and people can share with us because we get a lot of interesting interactions these days. Yeah. So I can understand why the business community would say, "Hey, we're going to tighten our belts here with spending," because you have to. You know, you're running a P&L. Everyone who doesn't understand it's a profit and loss, so you try to protect your margins, of course. So you can see reduced travel, but I'm also hearing other people that are just refusing to travel, you know, just to support Canada. And it's really interesting. I didn't think it would be a big of an impact as what you just described, Steve. But at the same time, though, anecdotally, Rich, your flight, I think, was Montreal to Detroit, I think you said.
Yeah, and then Detroit to Austin.
And was it chock full or just
Yeah,
a
it was
couple?
90% full, 95% full.
Yeah. Maybe we can.
I mean, also the other
let's
thing
see.
that they don't mention in these articles is that the loonie is at a 20-year low.
true.
And Canadians were struggling before the tariffs came. Remember, we know that retail sales is down, consumption is down, etc. We're going to get into that later, but anyway.
Yeah, I mean, it's certainly a mix of both, which we'll kind of cover, you know, a little bit further in the episode. Obviously, you know, the trade war seems to have sort of re-escalated as of a couple days ago here, but yeah, I mean, anyways, it's such a polarizing topic of conversation. Obviously, we had our guest on last week, Brent Johnson. The feedback was overwhelming. Some positive, some less positive. But Rich, I don't know if you want to read some of the commentary.
Well, I'll read the positive one. Just quickly, I won't read the whole thing or else Keith will get pissed. But he said, the three of you were on fire. Brent Johnson was really good. Said, I 100% agree with what he's saying about how to work with the US and the way the politicians have been to date. Keep up the great work, and I appreciate the pod. P.S. Steve stinks. No, he didn't write that. But yeah, I mean, that was one of the many positive emails we got. I won't say their name because I'm not sure if they would like that.
And we also received a few, not a few. I think it was roughly 50-50 though, between
You think?
very
I thought it
positive.
was way more positive than negative, but anyway.
60-40.
Well, so remember we had the infamous babbling turds email a while back, 100 episodes ago. This one ranks up there. So this individual
Might be the same guy.
It might be the same guy.
It could be the same guy. He's on a roll. So he said, so you can hear me better. Totally disgusted by your last guest. You are going out of your way to normalize a madman. Absolutely sick that you would give that asshole airtime. Man, I am pissed off. I couldn't listen to another word from that arrogant piece of shit. Take your podcast and shove it. To which Rich had a very kind response and blah blah. You know, thanks for following and all that stuff. And this guy, he's not finished though. After telling us to shove it, he has to write back again. And he says, he was kind. He said, thanks for your reply. Obviously, I am more than a little upset. Not sure you realize the seriousness of your actions. There is no time for other perspectives. That's a great one, hey?
That's an interesting.
There is no time for other perspectives, nor is this a time for ambiguity. You are either on the side of Canada or you are not. This is not a game. Your guest who believes in no borders or countries at all deserves no airtime, considering the circumstances we find ourselves in. Sensitivities are at an all-time high, obviously, yet you show no patriotism and provide no pushback on your guest's wild notion that we are incapable of defending ourselves. The three of you are truly not up to the task and should refrain from any further commentary that would further divide our country and threaten its demise. This is reprehensible.
All right, well, shall we get into it then?
Okay, so let's talk about our polls for this week. And after the political discussion, then we'll talk about religion as well. Let's go under there. Anyway, everyone, but we don't mean to anything but it is. Yeah, the point is, clearly a lot of people have, there's a lot of engagement with what's happening today. And, that's not right or wrong. It's how you feel. That's great. And the only comment that I have, and then you can email me if you want. Remember, I have thick skin. I don't care. Where was the anger and the rage before the tariff stuff came out? Because Canada has some pretty awful trends that were developing before this, and not once did anyone get upset about it. So let's go to a
wait.
Keith,
No, I want to
different
have my
conversation.
piece.
Yeah.
I have very thin skin, and I'll take all of the insults personally. So don't send them my way. But I'll tell you, to suggest that there is no other time, there's no time for other perspectives, to me is a really, really dangerous line of thinking and believing. What is it? What did Voltaire say? What is the quote that is falsely attributed to Voltaire? I might disagree with you, but I'll fight to the death to defend what your right to say it. And I think that that's a really, really important, like a bedrock of our democracy. We have to be able to have discussions with people we don't agree with in a sensible and open way. Anyway, I had to say that.
No, that's actually a good point. It's I've been talking about some colleagues recently in the office, but it's just like, my Twitter feed now, because like, obviously I'm very interested in the election stuff. It's obviously capturing most Canadians' attention these days, is like the algorithm now is just feeding me nonstop, like political, my whole feed. And I was like, I'm still a finance guy, still like macroeconomics. This is still a podcast that's rooted in that, but my whole feed is just politics now. And it's just like, and seeing it's feeding me like people that are like clearly more to the right, and then I also get a huge swath of people that are more to the left, just because I keep reading all these different perspectives. And it's just interesting to sort of see the polarization that people basically just want to keep sort of reading what affirms their bias already. And it's just interesting to sort of see the dialogue, not only on the right, but on the left as well, that people don't want to hear other people's opinions. They don't want to hear opposing views that, alter their narratives. And it comes down to like, when I just sort of talk to, whether it's friends, family, coworkers about, the election that sometimes gets brought up, and they say, well, I'm rooting for this candidate or that candidate. And they can't really actually articulate why they want to vote for them from a policy perspective. It's just like, well, I just don't like the other guy. They can't say, well, I'm voting for this person because I like this policy and that policy. And it's just, I don't like the other side.
Yeah, the rhetoric is pretty high, Steve, from both sides.
You got me there.
Yeah, absolutely.
I will just make one recommendation to our listeners. Follow people on Twitter that you you don't agree with, is what I would suggest. I follow all kinds of people from the wrong team, the right team. Just force yourself to like put people who I think are complete idiots but mean well, and try to support their views with data. And I would just it helps the brain,
It's interesting. It is interesting to read those different perspectives. And like I said, Twitter's algorithm is just feeding me up both sides, and it's interesting.
But anyway.
But To that point, Keith, you mentioned Canada, not many people being upset about Canada's, economic performance prior to the tariffs, right? I mean, I would argue having no growth on a per capita basis for 10 years at the very bottom of the OECD, just a sliver above Luxembourg.
Which is not even a real country, by the way. There's like 12 people who live there.
Nobody is even like, I mean, I would consider that, domestic economic warfare, which is, we've just pillaged ourselves, and no one is really batting an eye at our leaders, and in fact might actually just reelect the same governing party that presided over that lost decade. So I don't know. I mean, it's interesting. It's definitely a good case study on human behavior and psychology.
It really is. It certainly is. So anyway, we've hit on these points quite a bit, and our approach with this, or perspective, so we manage money for a lot of families, all over the place, and everyone we choose to work with, they're all engaged in one way or the other. And it's actually very pleasant conversations. But people who are not engaged, they continue to run on any, I don't want to, if I say emotions, people will get angry and everything. That's what emotions are, of course, right, Rich? Yeah.
Yeah.
But that's who we are. And anyway, we have another month left of this probably. But more importantly, from a just a financial perspective, I know we'll talk a lot about it today and go into more detail, but there were a lot of trends that were developing and escalating in the wrong direction before all of this tariff stuff started. And now with where we're headed, and global trade wars, this is what you want to call it, it's likely going to just simply accelerate that trend. And maybe things will turn around, but as of today, it's record on Thursdays, Friday you're enjoying it, or writing a nasty email to Rich, whatever you're doing right now. But again, from an insensitive side, I think it's actually it's really interesting, or the opportunities that are coming up here. Because boy, if you can distract yourself from the distractions, it is one of those moments.
Yeah, Keith, I want to talk about the sort of changing political winds or ideology around various levels of government in this country. One is obviously there was an interesting article from Scotiabank. So Scotiabank Economics put out a report. Again, this is coming back to our sort of lost decade there and where we got ourselves in. But so Scotiabank put out a report this week saying that if supply constraints had not tightened and population growth had stayed near its long-term average, the MLS home price benchmark for the country would have been slightly below $616,000 for your typical home in Canada, well below the $719,000 posted for Q4 of 2024. So they basically talk specifically about a period between 2019 to 2024 that the immigration side of it was responsible for effectively $100,000 difference in your national home prices. Now, again, I don't know, Rich. I mean, you'll pick this apart better than I can. I think trying to model this sort of thing is
very difficult.
Very difficult, far from perfect. Take that with a grain of salt. But obviously we know that, by bringing in 1.2 million people a year, that certainly had a dramatic impact on the housing market.
Yeah, and it's not just Scotiabank. So every quarter, we're going to talk about one of the publications that the Bank of Canada came out with like just a couple of days ago, because I think it's really interesting and speaks to a lot of stuff we talk about. But the publication I want to reference now is from April of last year or January of last year. I can't remember. They do a monetary policy report. It's quarterly. They publish a bunch of good research and charts and stuff, and they've screwed up with the formatting. And I wrote an angry email to the Bank of Canada, but they ignored me. But now, anyways, that's not the point. The point is it's very, very good data, and most people seem to like the new formatting. And one of the things that they had was that so what they do is they have the regular stuff, an update on Canada, an update on the world, and they have little boxes, and every quarter will be a different box. One will be inflation, will be on trade. And one of the ones that I'm referencing is on housing. And they speak exactly to that. And what they talk about is something called the housing supply deficit. It's very straightforward. We know housing starts has been relatively stable for the last 20 years, roughly around 200,000, give or take 20,000 or whatever. And we know that population growth, or what they call is like household or like demographic demand, basically the number of people, divided by the number of people in a household, had been relatively stable. Still higher than housing supply, but relatively stable. And in 2015, it popped up. So now we went from relatively stable 1-to-1 ratio to 2-to-1, where you're having demographic demand double the housing start. And so this has been known for almost 2 years now by people who are paid to understand and know it. So although I agree with you, Steve, that it's difficult to put a number on it, to say like, oh, each extra million people is 200,000 or whatever it is, the reality is we knew this was a disastrous policy a long time ago, and smart people at BOC were ignored.
I got a good story on that, actually. I was showing a house this week, actually, on the weekend, and it was in Vancouver. I won't get into like the specifics of it, but so the realtor was like, well, it's tenanted. It was like a traditional sort of what we call a Vancouver special house. So it's kind of like up, down. They're typically like 3 bedrooms up and then like 1 bedroom down. So it's a 4-bedroom home typically is how they are. And the realtor was like, well, just so you know, FYI, there's no pictures online, but the house was chopped up into 8 bedrooms. They're renting them out bedroom by bedroom. So we're kind of going there, obviously expecting a project. But we go in there and like the door handle's like falling off, and he's like, "Yeah, just knock. Like the tenants will let you in." And so we kind of knock like on bedroom number 1, and this nice Indian girl opens up the door, East Indian girl, and she's like, "Oh, like what are you here for?" And I look into her room, and there's like 4 mattresses on the floor. And I'm like, oh man, like when you kind of like open up the door, like just the staleness of the air just kind of hits you. Like there's 4 people sleeping in a room. I mean, you can kind of think about it, and just it was just appalling. Basically, every bedroom had several mattresses in it. Um, Again, the house that was chopped up. There's mice traps all over the place. So I was chatting with her, and I was like, oh, so you've been living here? Yeah, I've been here for a couple years. And I was like, oh, well, what do you do here? She goes, oh, we're all students. We all go to, and she named the school. And I know it's a very infamous, well-known diploma mill in Vancouver. Like it's a fake school. It's total bullshit. And she's like, yeah, we're all going to school here, and we're just here for 2 years. And yeah, it's just crazy just to see. I mean, that was like front and center, like our immigration system, everything we've talked about on the show was like right there in your face.
I have a couple of questions. Do you know how much each of those kids pay to live there?
Well, I know they were paying $1,000 a room. So, for this,
so they were splitting the room between 4 people, I imagine.
Yeah, I would say if I had to
Or
guess,
3 or whatever.
There's about 2 people per room. So,
Okay.
I mean, I guess 500 a piece. So that house was renting out for $8,000, which like if you weren't renting out as an 8-bedroom sort of hostel or whatever you want to call it,
Yeah.
I don't know, you that house would probably rent for $5,000. So the guy chopped it up into an extra few rooms and tossed a few students in there. But I mean, the living conditions were just, honestly, they were disgusting.
I feel bad for that girl. That is not what she bargained for, or what she was sold. I can guarantee you that.
Yeah, I mean, pretty wild. But
yikes.
So yeah, that's the
Is
state
it your
of
duty? Sorry, one more question. This really fascinates me. Are you like required to like report that? Like, is that even illegal? Like, actually, we're bitching
honestly,
about it. Is it illegal?
Yeah, that's honestly, I'm not even too sure. And I was like, I don't know if I want to get involved here, truthfully.
Interesting.
Is there like a realtor code of conduct or anything?
No, of course not.
Well, I mean, you have to disclose that the rooms are like unauthorized, but like I don't know, there's so many rooms in Vancouver and whatever that are unauthorized. So I don't necessarily know. I don't know the city bylaws and all that other stuff, but
I mean, this what you share with us, it's a real good dose of reality for a lot of Canadians that are just simply naive of what's been happening out there.
So what these people do in the house, for example, is they go to that sort of fake college to get this diploma that doesn't really get them a real job at the end of the day. What the federal government did was they changed the temporary worker rules to allow these students to go from, I think it was 20 hours to, I think they were allowed to work up to 35 hours a week. So effectively what they started doing is they just basically stopped going to school, or they go to school at a minimum. They would stop attending, say, full time, even though they'd be fully enrolled, and they would, go get a job at Tim Hortons or DoorDash or whatever, and effectively work for minimum wage. All while trying to get basically their diploma and then fast track them to PR in this country. So that's effectively the situation.
So. And they probably paid for the privilege, right? They probably paid an incredible amount of money.
I mean, that school is not charging. It's a lot of money. They're charging a lot of money.
So what would be tuition then, as an example?
I mean, I don't know the figure off the top of my head. I mean, I've heard some of the figures from different colleges and stuff out there. It's a huge chunk of stuff. Like, these people are basically they're leveraging the farm back home, basically.
Yeah,
like literally.
Sometimes literally, yeah.
Yeah. So like you can't just return and be like, oh, I didn't get PR. See ya. So that's where the conversation's coming into. Like, Canada doesn't track outflows, so we're asking all these non-permanent residents to leave the country because we're trying to get these numbers down after destroying it for the last number of years, but you don't track outflows. So like you can say these people leverage the farm back home. They borrowed money from family members, etc. And you think they're just going to willingly leave and go home?
No,
I don't know. I don't think so. So anyways, to that point, Sean Fraser is back. The immigration minister responsible for all of this announced, after saying that he was stepping back from politics to spend more time with family, he's announced he's back in the Liberal leadership race to secure his seat once more as immigration, who then turned into the housing minister. He will be coming back. So Canadians, you have the opportunity to re-elect him for another 4 years if you so desire.
I could sort of sense like a cartoon picture of a trough where someone was eating at it for a number of years and they left because they were full, and then they quickly turn around, they're running back to it again.
Should we talk about the other publications that have come out about Canadian economy and stuff?
Yeah.
Okay, cool. Great. I really want to.
Your show, bud.
No, I don't know. I'm trying to get us away from the politics.
No, yeah, 100%.
People
100%.
know.
Rich, can you use a Texas drawl this time? Your British accent ranks up there with the Queen. Let's hear your hi, y'all.
I would love. I can't. So, anyways, one of the things we've talked about a lot. And they actually approached me, funnily enough, they actually approached me to be a member, but it's not the right fit, which is the Canadian Federation of Independent Businesses. And they do a monthly publication, which I recommend everybody to go check it out. It's free. It's on their website, and they ask people a bunch of questions. And this month was particularly interesting because it had the 12-month Small Business Confidence Index had the largest collapse or fall ever. And it's basically at an all-time low. And the survey question is, how do you expect your firm to be performing in 12 months compared to now? And they take what they do is they do somewhat better, the same, and they basically, worse, and then the same, and they just net them out and you have a balance. And so what that means is like basically 25%, it has a net negative of 25%. And that's a really, really huge number. And of course, small business surveys are important because they relate to economic performance. You can just get a feel on inflation, which I've talked about in my video this week, and a bunch of other stuff. But the problem is, so that was the headline, and it is stark. There's no way to sugarcoat it. I mean, it is a horrific number, which I think is also important to people know that these business surveys talk about other things like skill shortages, whether people have access to working capital, people have the cost of input products, insufficient demand, etc. But I think it's also important people don't know is that the sample distribution is quite skewed, and that's something they don't talk about on CTV or CBC or even the Bloomberg report where I read it, and that a lot of these companies are skewed towards retailers. So 26% of the respondents are actually retailers.
Can I
yeah,
chime in there?
Yeah, of course.
Well, I mean, obviously, like the survey suggests things are not great. I just have found, again, I don't know if you guys have had these similar conversations, anecdotal, but I speak with like a lot of people on a daily basis, obviously just so, typically about their housing needs. Hey, I've got this property or I got this investment property, and or sometimes they're renting and they're whatever, right? I mean, it's just my job basically just to talk to people all day, every day. And I can tell you from my perspective here is the amount of conversations I'm having recently about people that are like unemployed, that just lost their job or they're looking for work. It's quite a bit, which is interesting because I never had those conversations like a year ago, 2 years ago, 3, 4, 5 years ago. Didn't never came up. Now it's just like, oh, and what? Sorry, why are you selling? Why do you want to sell? Oh, well, I just lost my job, or I'm not working right now. It's interesting. So that's just purely anecdotal. Obviously, we'll see if that gets reflected in the Stats Can unemployment survey.
But it already is, right? So that's just, this is, I know Keith wants to jump in there. I'm sorry, Keith, but just like, that's what Keith was mentioning before, is that a lot of this negative impulse was happening 2 months ago. Oh, sorry, excuse me, before Donald Trump started tweeting, and
Yeah.
before the government was even prorogued. The unemployment rate in Toronto alone, the biggest part of GDP, I guess, part of Canada, is 9% or just under 9%. It's very high. That's the highest it's been since 2014 or 2012 or whatever it is. You know what I mean? We haven't had retail sales. We haven't had capex growth. You know what I mean? And so anyway, I just think that that's sort of just a continuation of this theme that we've been talking about sort of at length now.
Yeah, and so again, it's from an investment perspective. What's great about this, we're able to reconcile bottom up anecdotal data or narratives, whatever, with what we're seeing from a top down perspective. And the anecdotal stuff is in real time. That's what's happening. And Steve, I'm having the exact same conversations. 9 out of 10 people that I'm speaking with, it's the same thing. Like they just see things are grinding, or if there's a business owner, like a typical example, there is a, and this is what makes it uncomfortable for a lot of people right now, is that this increase in cost because of the tariffs. Most small business owners, they've decided they're going to eat it for 2 or 3 months, but
Mhm.
that's about all the runway they have with it. The hope is that, hey, this gets sorted out in a couple of months, and maybe it will, right? We don't really, in Canada, I don't think any of this gets sorted out until after the election. So, we're 5 weeks away, but it could. But a lot of small business owners, they have a choice. They find a different vendor, do they pass along the cost to someone else, and then they'll lose the contract altogether. So this is creating a lot of uncertainty for people. And to Rich's point, but we were starting to see this anyway before the tariff war started. And again, until data comes out or a narrative comes out or anecdotal stories that force you to think a bit differently, we continue to be headed, smack dab into something that's unpleasant. But just something else for people to think about from a market perspective is that, when people are working, every paycheck, usually there's a portion of it, a slice that goes to some kind of retirement savings account, whether it's a pension plan or RSPs or whatever. And then that automatically gets thrown in a fund of some sort to buy, equities and stocks or bonds or something. So every 2 weeks around the world, there's always a flow of money going into the markets. So as long as you always have positive employment growth everywhere, that there's always that, the last dollar is going into the market. It's not coming out. And I think a lot of people will agree that, employment growth it's still growing from a lot. It doesn't matter if it's private sector or public sector, but it is still positive. We haven't seen the recession yet.
Right.
Right now it's grinding. They're willing to eat the losses for a couple of months, and maybe numbers are down somewhere else. But if we start to see, negative signs in employment, uh, jobs, then all of a sudden you're going to see a lot less money flowing into financial markets. And that's going to cause a big trigger. Like I know, remember we had Mike Green on a few months back. Mike, he's a U.S. Investment manager, and we know Mike well, but he's done a lot of work on that and the flows that come in through both passive funds and active funds. And like during almost the whole time you're researching this over the last decade, you want to call it that, it's always been job growth all the time. So the moment we do hit a recession, of course, that means earnings are going to be affected, everything. But that flow, that last dollar going into the market is now gone. And no one's ready for that. The big banks are not writing economic reports on that. They're doing something a little bit different. And this is the kind of stuff that people need to be paying attention to.
Ever been abroad and needed Wi-Fi? Download Saley. Tired of telecom oligopolies ripping you off? Download Saley. Want to avoid sketchy SIM sellers at the airport? Download Saley. Saley might be the only travel app you need. It provides an internet connection wherever you travel and saves you money on roaming fees. It's easy to use, affordable, and reliable all over the world. Saley is the modern, seamless way to get connected without the need for physical SIM cards. With eSIM technology, you can instantly activate service from anywhere in the world. No more waiting in line for a local SIM or dealing with expensive roaming charges. Saley offers flexible plans to fit your needs, whether you're traveling for work or leisure. Plus, you can switch between networks in just a few taps, ensuring you always get the best coverage at the best rates. Whether you're a frequent traveler, an expat, or just someone who wants more flexibility with their phone, Saley's got you covered. No hidden fees, no contracts, just affordable, reliable data wherever you go. Visit Saley.com/Loonie Hour for 15% off.
Well, I think we were kind of, Rich, you've talked about it. We were kind of heading that direction. Canada was already kind of in the midst of a household balance sheet recession. And then you kind of layer on the tariff war on top of that, which obviously is going to impact jobs. And I think we can get into that. So it's kind of like you're just layering this on top. And what was, we talked about at the beginning of the show. I mean, Canada was already in a really tough spot.
Well, there's more data. Can we talk about more data?
Yeah, fire away.
Hooray. So there's another publication that came out, again, from the Bank of Canada, and it was called The Indicators of Financial Vulnerabilities. It was updated on March 21st. And it's quarterly data, and what it does is it's used to track the evolution of vulnerabilities of household indebtedness, house prices, sort of not default rates, because defaults and delinquencies in Canada are quite low. We've talked about that before. All the banks do all kinds of shenanigans basically to get around households defaulting on their debt. But one of the charts that I thought was really crazy, really interesting, is something called share of loans in at least 90 days arrears. And you can see that basically every single type of mortgage, home equity lines of credit, credit cards, unsecured lines of credit, automobile loans. And to me, the one that really stood out was installment loans. Basically, they're all at 10-year highs in terms of 90 days arrears, which is a fancy way of saying you're behind in your payment. And so now we have a share of indebted borrowers behind on payments for at least 60 days at a 10-year high. And this is the interesting thing about this quarterly data is that it ends in December. So this was all, and we know basically what that means is we know for a fact that this data Canadian households were already under incredible pressure at the end of Q4 2024. Now the argument could be that they've cut interest rates since then, and so we should have a little bit of reprieve in some, maybe. But to me, I don't think that changes the trend materially. But it's just another sort of piece of the puzzle on this trend. We actually really haven't seen real proper pain, even though these arrears are at not all-time highs, 10-year highs.
Yeah, no, I think that's a good point. I mean, I think that, it's funny, right? If you look at mortgage arrears, they're coming off all-time record lows.
Right.
So they're just starting to pick up. So everyone kind of I know we talk a lot about the housing market. It's certainly in a tough spot. But if you look at mortgage delinquencies, they're honestly historically insanely low. And obviously this is a huge lag effect there. But I just kind of want to put that into context, because I think people will maybe hear this episode and go, wow, 10-year highs in sort of credit defaults. But that's
Can you explain that number, Steve? It doesn't make sense. I'm looking at the number right now. It's 0.17% of mortgages. Why are those numbers
nationally,
always so low?
So nationally, the percentage of mortgages overdue by 90 days or more rose from 0.14% to 0.2% as of Q4.
So nothing
It,
basically.
it's non-existent. I mean, well, obviously we're seeing some, the delinquencies we're typically seeing today is typically private lenders, first mortgages, second mortgages in particular, people that can't roll the debt anymore. It's obviously getting harder when home prices stop going up. They actually
Right.
flatline or decline. So as the equity starts basically eroding, it just becomes that much more difficult to get a new loan, right? Because those private loans are typically 1-year loans, sometimes 2-year loans. So they roll over basically, let's say every 12 months. And so if you're going back to the same private lender to roll it again, he's going to say, well, the economy doesn't look very good and your house price is down 5%. So I'm going to give you a smaller loan than what I gave you 12 months ago. And so you got to come up with the excess cash, right? So I think that's kind of what's happening in that private lending space. Looking at it here in Vancouver, it's in terms of defaults, foreclosure listings hitting the MLS system, it's incredibly low. It's obviously picking up. But I think that's some important context for sure.
It's Steve.
Okay.
What's happened with, say, a 5-year fixed mortgage rate from January 1 to current day?
It's kind of been bouncing around. And again, this is something I follow really, really closely. I'd say today, like if you're a really well qualified borrower, the banks like you're taking on a bit of a larger mortgage, you could probably go to a big bank today and grind them for a 5-year fixed at 399, 409.
And what was it on January 1 or 2?
Probably
Is it
like
the same? Has it changed?
no, probably about 4.3, maybe 4.4. So we've come off 30,
come off a
40
little bit.
basis points, I'd say. We've basically been fluctuating between like 4 and 4.4 this year. So like again, there hasn't been a dramatic change. Everyone keeps talking about, every homeowner's like, oh, the Bank of Canada is cutting rates. It's like, yeah, again, that's changing your variable rate mortgage, but I mean, variable rate mortgages today and fixed rate mortgages today are pretty much the exact same. So they're pretty much on par.
Yeah, because earlier we're chatting about what's happening with rates around the world. So, for Canada, for example, so the Bank of Canada cut by 50 basis points, half a hundred since beginning of the year. And the 10-year in Canada, it's down about 10 basis points. So that reconciles with what you shared then on the 5-year. The American 10-year bond, like the benchmark bond for the whole world, that's also down about 10 basis points in yield since the
For
beginning of
this
the year.
for the calendar year.
Yeah, no, not
Yeah.
for year to date. So think of before the tariffs, into the tariffs, and here we are. It's bounced around a bit, but from the beginning of the year, both the Canadian and the 10-year, the Canadian and the American 10-year bond yield, they're both down about 10 basis points. So that's not signaling something enormous. However, the curve has steepened in Canada, and it hasn't in the US, so it's become more flat if you think about it. Because remember, the Canadians cut rates by 50 basis points, and the Yanks, or the Americans, I like calling them the Yanks, the Yanks didn't cut by anything. It was zero. So you say, hey, where's the risk? Where's the risk coming out? And that's when you have to look at, the economic fantasy land called Europe, right, Rich? I can't hear Rich. Steve, can you hear Rich?
I muted myself by accident.
Okay, yeah, thank you. He was agreeing, everyone. So, but let's just set this up. So, in the ECB world, rates have been cut by 75 basis points. That's what's been happening.
Yep.
And the 10-year in Germany and France and pick any of your favorite European destination. Remember, in Canada, US, it's minus 0.1. In those European centers, they're all up by about 5-0, so 50 basis points.
Sorry, Europe's up about 50.
Yeah,
but remember,
Germany,
so the curve,
Italy, France.
So
yeah,
okay, Loonie Hour audience, put your thinking hats on, tie it tight, or wear your helmet, whatever you want to do. So think about it. In Canada, the curve has steepened a bit because we've cut rates. They cut overnight rates by 50 basis points, but the long end hasn't budged really. So we've had that taking place. Meanwhile, in Europe, they've cut rates by 75 basis points, and the long end of the curve has gone up another 50.
And what's your view behind that in terms of like why that's happening?
It's like a fantasy world.
Come on.
So but to be serious, and then to bring for the Brits, they're going in the same direction, but not as bad. And I know we were chatting earlier, and Rich highlighted that maybe one of the most vulnerable economies or countries in the world right now. It is the UK. I think we all agree on that one, even more so than Canada. And then in Japan, I mean, in Japan, the 10-year has gone up 50 basis points. No one's talking about it because everyone's being, they're looking at the whole tariff war. But there were some pretty big, significant changes. And meanwhile, credit spreads, Rich, you introduced last week or the week before, credit spreads for both investment grade and high yield, they're up about 30 basis points, I believe, since year to date.
Keith, can you give your opinion on, just to summarize for our audience that's maybe not, in tune with the bond market, why is that long end pushing higher? So obviously, the curve is steepening. Can you detail the sort of investor sentiment behind that?
Yeah, so in Germany, in Germany especially, so what happened, the new US government, they said, hey, we're not paying to protect you guys anymore. And from a military perspective with NATO. So, there's a lot of political stuff about that. And America said, we're not paying for it. So the Europeans, all of a sudden, after years of not paying for it, decided they're going to create their own army. So to do that, you need money, of course, and lots of it. So the Germans announced they're going to increase spending by, I think it was 500 billion euro. And that's not 1 year. I think that's over a number of years. Yeah. And of course, 100 of that is for climate change, of course.
Of course.
Yeah, that's
nothing takes out a Russian tank like a windmill. Anyway, carry on.
Flying windmill.
Oh man, Brad Pitt would have laughed at that in his tank movie. Yeah, the windmill behind him. But what this means though, like, who has 500 billion euro lying around in Europe right now?
Nobody.
And not even Luxembourg, not even Rich's favorite country.
Maybe Bermuda does anyway.
I don't think they're in Europe. So
I see what you did there.
Yeah. Steady. But so what this means, everyone, is that, the Germans are going to spend more on military. Same with the French and the Italians and everyone else. They don't have the money, so they have to borrow it. So because they have to borrow a lot more money, and not just a smidgen, like this is a ton of euro that's going to be borrowed. It means immediately the cost of borrowing just went up half a point. A half a point. So what's half a point on 500 billion euro?
25 million?
I think it's 250 maybe.
Half a point.
Anyway. Someone check.
Check Loonie Hour math. So the point is, though, it's now a lot more expensive for all of Europe to borrow when they need to borrow. Their deficits are going to blow out. The economies are already grinding lower at the same time.
Mm-hmm.
And yet, you make an argument, is that a productive? Like, does that increase productivity for your economy, putting in the military? Maybe it does. Maybe it doesn't. Who knows? But the point is, you can, and again, for whatever it is, it is what it is. The Americans did not want to spend more money in Europe for NATO, for military, and they got what they wanted. The Europeans.
Well, to be fair, they already pay like 75% of the budget, just so people understand.
Yeah, absolutely. So, but see, if you're asking, hey, why did rates go up so much higher in Europe? That's why, because they're going to borrow like gobs amount of euros that they were not going to borrow recently.
There's another way to explain this really quickly, which is interest rates are just a different way of saying price, right? So if you increase the supply of something, what happens to the price of that thing? It goes down, and the interest rate is just a reciprocal of that. So the yield is just a reflection of that. So if you have a huge demand for something, price goes up, and your yield comes down, and vice versa. Steve. That was
Yeah, no, that's a good point. I mean, obviously, yeah, we're reaching the point today where budget deficits actually matter again. And obviously, we're seeing governments now sort of pivoting and reacting to the new economic realities that we're all facing. And of course, again, you bring this back full circle to Canada, and I think you're realizing that as your largest trade partner sort of closes you out to some extent. You got to look for growth to pay for all the debt. And how do you get growth in Canada? Obviously, it's through our natural resources. Now you've got all political parties saying that we need to build pipelines east from west to east, and we'll see.
And the other perspective with this, we are Canadian centric, with the conversations, of course, but we have consistently shared with the audience that, sometimes the risk to Canada comes from outside of Canada. And right now, today, financial markets are saying, yeah, Canada, has some struggles coming up. That's obvious to everyone. However, the real risk to Canada right now, from a global perspective, it's clearly in Europe. That's just ground zero. And you can see it with the numbers, just from the borrowing costs. And again, the 10-year in Canada, it's flat basically where it was before the trade war started. That's a compliment to Canada. It really is. So it's probably the second best performing G7 country with their change in yields.
Somewhere, Krista Freeland is smiling,
yeah.
listening to the Loonie Hour.
But it's not. I mean, there's I know other different perspectives are not allowed anymore, but there is a different perspective, a more generous perspective that I have on Europe that Keith is going to admonish me for, which is, it's also reflected in the currency. I think, the difference between what's going on in mainland Europe and, let's say, what's going on in the UK, I think reflects maybe two different perspectives on where that debt and deficits are going. Because the UK, you had the spike in interest rates, and you've had a relatively weak currency over the last little while, though it's had a couple of good weeks. Whereas in Europe, it's sort of been the opposite, where you've had the spike in interest rates and the currency's been relatively strong. So I don't know. Maybe I think that Europe is, if we had to rank the countries in Europe.
Yeah, so you think of like three markets. So you have the
Right.
bond market, which is the long end of the curve or duration. You have the
Mhm.
stock market, and then the currency market. When you have a big change taking place, you're not going to have all three going in the same direction. It's impossible for it to work out that way. Someone has to be the loser with this new arrangement. So in Europe right now, the loser is the bond market. That's what it is. Because you're right, Rich. The currency has jumped up maybe 4%, 3.5%, 4%. And actually, if you look at the chart on the euro spot rate, we're now we've now just reached down below that initial rise from when this announcement happened. So the initial euphoria with all this, hey, this is awesome. Germany's going to start spending, the economy's going to take off, companies are going to do awesome. And so if you get the bond market going down, the stock market going up, the currency will follow one or the other, and it follow the equity markets here. And now we'll see where else this turns next. I remember back, and I think I said this story before, but back in the 90s, we had the big earthquake in Japan. I forget where it was.
Fukushima.
No, that's 2011.
Yeah,
Oh, close.
Was it Kyoto?
This is before the internet.
Yeah, it was. I found out about a month after it happened. And but at the time, like, it created, billions in losses because they had to rebuild everything. And the stock market starts going up and the currency went down. And the theory was, oh wow, this is this is great. There's going to be a lot of money invested in the Japanese infrastructure, create jobs and everything. And of course, then you get the broken window fallacy attached to it. Well, why don't the whole world then just destroy every building we own?
Don't
And
give him any
borrow?
ideas, Keith.
Oh, sorry. But anyway, my point is that whenever you get an initial sharp move in the financial world, it doesn't matter what kind of market it is, don't get caught up in the hype. Let it settle And then you'll figure out, okay, is this real? Does it make sense or not? And right now, the way the currency is moving for euro, it's suggesting maybe things aren't going to be as awesome in Europe as it was before.
I think people don't realize that, Keith, is because there's like the impulse, there's like the news, there's the reaction, and then there's also like positioning. And like that's something that's so important. Like if people are already really one of the reasons I think the US dollar fell so sharply when Trump came on the tariffs, because the dollar was like one of the best performing currencies. It was really heavily owned, to use the parlance of the finance bro. Like the sentiment was, it was like overbought. Sentiment was very, very positive. If you look at things like net speculative positioning, or CTAs, and how much they were holding and when and why and the timing, all that stuff. And when you get sort of a negative reaction or a negative headline, if you're really, really overbought or really, really, really oversold, you'll tend to, that's when you have these like really quick dislocations. And Keith's right, you have to like let that sort of, the market sort of recalibrate to get a better view of what that trend is going to be. I don't know. That's my view on it.
Yeah, and so like right now, for example, just we will get a resolution to the tariff war. So it's either going to look a lot worse than what it is right now, or a lot better. It's not going to stay static. I would imagine that after the election is over in Canada, they're going to come to some kind of agreement somewhere. However, whatever happens, this exact same dance is going to take place with Europe. Europe is now in the crosshairs, I think they call it, with your scope. So global growth is going to slow no matter what. So if we do get a resolution to the tariff war, there's going to be that initial euphoria with it, but then reality is going to set in again.
Keith, can we just chat on that point about how much of this is, again, intentional? I know that our listeners, Canadians hate Donald Trump, fair enough. And, people say, oh, this guy is just, complete psychopath. He's got no plan. I would argue that he's got some smart people around him, that there actually is a bigger plan here. So there's some interesting commentary from Treasury Secretary Besant. Again, keep in mind, this guy has been involved in markets for 30 plus years. I think he's considered one of the smartest guys in sort of financial markets. So he came out with this quote a couple weeks ago. He says that the White House, they said they were basically going towards a guaranteed financial crisis. So he says, quote, "What I could guarantee is we would have had a financial crisis. I've studied it, I've taught it, and if we had kept up at these spending levels, that everything else was unsustainable." Besant said on NBC, "We are resetting and we are putting things on a sustainable path. I've been in the investment business for 35 years, and I can tell you that corrections are healthy. They're normal," he said. "What's not healthy is straight up that you get these euphoric markets, that's how you get a financial crisis. It would have been much healthier if someone had put the brakes on in 06, 07. We would not have had the problems in 08. So again, Keith, I kind of go to you on this, but I mean, effectively, the U.S. and the Treasury Secretary is effectively saying, listen, yeah, we're doing all these tariffs, and there's a grand plan here that I think they're okay with engineering a recession, that they want to get deficit back down to a more manageable path. Obviously, hence the Doge and the layoffs in the public sector, that they are basically trying to clean up their books. And this is part of their plan. And you might agree with that plan, you might disagree with the plan and how they're going about it, but clearly they're okay with markets selling off and engineering a slowdown globally.
Yeah, you're absolutely right. And I think the key word you said there, Steve, is that it doesn't matter whether one agrees or disagrees with what the Americans are doing, they're doing it. And I also think they're being crystal clear of what they're going to do. It isn't chaotic at all. It might be chaotic the way it's playing out, but their end goal, that's where they are headed. And I agree with Besant's comment. Like, we always talk about the lost decade, the 08, 09, overnight rates went to zero and QE was used to flatten the yield curve for a decade. And I always say Canadians don't know what risk is. They haven't seen it before. We've had 40 years with no risk in the Canadian marketplace. And if this develops the way that I suspect it's going to develop, that's with a pretty severe recession for Canada. And again, I don't mean, an Alberta oil-driven recession, and which we've been told, don't worry about Alberta. That's their fault if bad things happen to them. But if we get a recession that I think is going to happen, which is being suggested as well by the Americans, this is going to rip the soul right out of Ontario and Bay Street. So I think it's very clear, and that's what you need to prepare for. But because no one has experienced it before, they just don't think it's possible.
I mean,
That's so Oh,
go ahead. Go ahead, Rich. Go ahead.
I was just gonna say, but that's why it's so important to like recognize that if like I snap my finger, I'm in Austin, I will go find Marco Rubio and say, please, please, please get rid of these tariffs. Still think all the structural issues in Canada would be there. Shitty productivity, no capex growth, unemployment rate to 9% in GTA, falling sales volumes. Yes, the small business sentiment would improve drastically, but I still think that maybe there would be that optimism would persist for a time. But I think that a lot of the issues we talked about for 2 years now are all there. And I think that even if we got rid of those tariffs overnight, I have a hard time believing that all of those things would be rectified. Sorry, Steve, that was what I just wanted to pitch in.
Well, no, I mean, effectively, from other commentary from Bassett, I mean, effectively what they want to do is they want to get long-term interest rates down. All right. I mean, in order to sort of finance the U.S. deficit, obviously, I think Trump is very, he's a real estate guy. I think if he can get mortgage rates down, your 30-year fixed rate mortgage down as well, and help people sort of afford housing again. That to me is
so just share with everyone, how do you get long rates to go lower?
You got to engineer a recession.
You need a big recession to do it.
And that's why they are seemingly okay with, the stock market selling off. And if it pushes more capital into the bond market and drives yields lower.
But there's not, again, context, right? So people are, incredulous. They want to reduce the deficit. The previous administration was running an 8.7 or 6% budget deficit at full employment. And that's basically never, ever happened, right? That is not Keynesian, right? That is not Keynesian economics. That's just pedal to the metal, super inflationary spending. Now, you might like that spending. I happen to like a lot of it, but that dislocation is something that also Mr. Bassett has said before. He said that was nuts. You should save those deficits for rainy days.
Similar story in Canada.
You beat me, is exactly what I was going to say. To run budget deficits when you're supposed to be, saving for a rainy day is a dangerous and inflationary thing, and it props up asset values, hurts the working class, etc. And I think that that's something that he's said in a previous interview.
And the challenge we have now, let's just say we do get a recession coming along. And it doesn't matter what color shirts are in Ottawa or in Berlin or London or what other other country. Paris is true.
I see Paris.
Rome.
I see France. I see
Madrid.
Underpants.
Oh dear. However, if we do get this recession, deficits are already out of control or uncontrollable, or it's hard to get improvement. Because the deficit will deteriorate, it means new debt has to be issued, so more than was originally planned. And then also older debt that's rolling over has to be rolled over at an even higher rate. At the exact same time, there are less tax revenues coming in.
I was just going to say that. Yeah. I mean, does your deficit not almost get worse if you enter that recession, right? Tax revenues down.
You're right, Steve. And the debt problem or the interest burden, it becomes exponential. So as a household, just say there's 100 grand coming in, and come into your home, and just to say 10,000 is going to interest expense on mortgages or credit cards. It doesn't matter. And then all of a sudden, because of all that debt's coming due, and you have to roll, like term on your mortgage goes from 2% to 5 or something like that. And all of a sudden now instead of spending 10 grand a year on interest expense, now you're paying 15 grand. So the extra 5,000, so call it like $450 a month or whatever, 480. That's the problem the Canadians are going to have, and the Americans and the Brits and the Germans and so forth. This is now there is a way out, of course. We just simply need the global economy to grow much faster than this exponential rate of growth of our debt problem. And Rich is, well, did you flip the finger then? What was
No,
that?
I was saying product increases in productivity growth.
Oh, cool. Yeah, absolutely. Yeah. So, and there are, I
Oh,
think
I thought that
Canada,
was a P for control print.
Oh, that's all. I mean, no,
That
that
works
just
too.
makes things. That, I guess that
but
works.
what's different with the Canadian opportunity versus the Brits and the Germans and the French and so forth? Canada has an opportunity to get out of this. It has a bigger opportunity than anyone else on the planet to do it. They just got to be willing to do it.
Yeah.
Well, I mean, to Rich's point, you have to harness your natural resources.
And use that. And the other thing, one of my friends is an investment banker in London, no big deal. And one of the things he said to me was really important is like one of the things we forget about as far as opportunities in Canada is it's not just like harnessing our natural resources to then sell them. Is that like if you lower energy prices a lot, like those industries sort of create themselves in a sense. So one way of fighting Donald Trump tariff on aluminum, for example, is by making energy. Maybe it's a silly example, but just by making energy prices even cheaper, so you can bring in industries that are high energy industries, right? That take a lot of energy, whether it's hydrogen, you want to create hydrogen, or you want to do this or that, or manufacturing is a highly intensive, energy intensive business. Chemical production is a highly energy intensive business, right? And so if you release that and create and use abundant cheap energy, whether it's renewable or otherwise, you can sort of have the foundation for lots of really great businesses that can exist and pay taxes and support people, etc.
I mean, remember, it better be renewable, because if it's not, it's going to be smoked with an industrial carbon tax.
Yeah. So what happened in Germany? Is that what happened in Germany? Oh my God.
Well, I mean, obviously, we've removed the consumer carbon tax in Canada, but we're going to ramp up the industrial carbon tax on things like steel and aluminum, which Carney says we don't use very much of. But yeah, Rich, to your point, to kind of wrap it up, was in Germany, Germany's following the same sort of craziness. A coal-fired power plant was blown up, so for $3 billion. So basically, in Hamburg, Germany, they tried to blow up the modern Moorburg coal-fired power plant, the construction of which cost 3 billion euros. It had a capacity of 1.5 gigawatts. It was the most modern and efficient coal power plant in Germany, and it cost 3 billion euros. However, she worked for only 6 years due to the government's green policy on the development of renewable energy resources. The plant was closed in 2021, and they have just demolished it.
Okay. Yes. Okay. Now my another website today, I recommend people go and check out something called the globalenergymonitor.org, which is a really, really amazing website. And you can track every single type of plant, nuclear, renewable, solar, every single project.
What's the site called?
It's amazing. It's called globalenergymonitor.org. Okay. And then what's amazing on this website is that there is a specific thing called coal fire plant tracker, whatever it is. And you can see that, and you can see all the new projects. So right now, there's something like 982 new coal fire power plants being built in Asia. So Asia is obviously huge, but obviously dominated by China naturally, and then a bunch of them in India and Indonesia and whatever. Anyway, so just when you hear these freaking stories out of Europe, who are like just committing like ritual suicide on their industrial sector, it's important to remember there's loads of resources out there that are free and amazing, that just shine a light on the profound stupidity of these people, and they just don't get it. It's amazing, and I just love it. It's a really cool website. It's got everything you could ever imagine on it.
But the crazy thing is, Rich, just it's these people can't be like dumb. Like these are obviously like smart people surrounded by academically smart people that are getting consulted, that are obviously just maybe just so blinded by their own ideology that they just
I don't know, pal.
You
they
know,
make these decisions.
I
Like
think about
you
this
can't
all the
tell me these are
time.
actually like dumb people in the room.
But there's a difference though, Steve. When like I hear that all the time. Some people like I'll make a comment and somebody say, "Well, that's a really smart person that said it,"
Yeah.
and my response is, "Well, yeah. I mean, everyone is smart in different ways and in different things. But just because someone is really smart, they have a degree in something, it doesn't mean they're smart in something else, in the very subject
Yeah.
matter that you're talking about."
Maybe smart on
So.
sort of energies and renewables, but less so on geopolitics. I don't know. And then they don't blend and mix. I have no idea.
Well, Canada has a pretty big decision here coming up. The Americans have decided we're going to develop their energy infrastructure to the nth degree. And it's
Hmm.
not going to, they got it for 4 years, whether people like it or not. The Europeans, they've locked into that as well. And we'll see what Canada's going to do. And this is my belief. So you can say, hey, Boomer is smart, or he's not very smart about this. I think if Canada continues down the same path that the Europeans are going, which means they're going to restrict our energy and resource sector output, I think we are headed for this spectacular history book chapter for economics that's coming up.
So
And
I
that's
agree.
just a veiled way of saying we're headed for a major crisis, guys. And once it happens, you can say, "Oh, no one saw it coming. They were
No,
smart
we saw it
people."
coming.
Yeah, we saw.
Rich, what
Rich is
happens?
living in Guatemala
Well,
by that
I'm just
point, of
like,
course.
guys, I just don't take my word for that. Just like go on the website and just click through. I'm looking at it right now. 974 coal-fired power plants under construction, permitted, pre-permitted, and 158 of them are announced. And it's madness. The people in Europe are deindustrializing. I mean, anyway, sorry, Steve. I just think it's totally nuts.
Well, yeah, no, I mean, speaking of that, I was just kind of curious on your like final thoughts on sort of the auto tariffs in Canada. I mean, obviously, the current administration in Canada has kind of really gone all in recently with support to the automobile sector in Canada, particularly around EVs. Um, yeah, I'm just kind of curious if that's obviously backfired now that you're like, well, I don't know, how are we gonna manufacture and export Canadian vehicles with a 25% tariff? And I think EV adoption is clearly slowing in Canada given the costs involved. People are clearly, tightening their wallets. I don't know.
Yeah.
Yeah, I mean, it's interesting.
I mean,
to
I
have
always
this-
thought I always thought the subsidizing battery manufacturing in Canada was absolutely nuts. I'm happy and I'm sad and happy that I'm being proven right about that. It was nuts before Donald Trump got elected, by the way. And that's because you can't compete with China on price and manufacturing. I think there's different ways that you can compete. One of them, for example, is having extremely, extremely, extremely low energy prices, which maybe could make manufacturing some high energy intensive products really like cheap and effective. But BYD, again, people complain about Chinese manufactured products all the time. BYD is proving all these critics wrong. It's a good car, man, and people like them, and they're cheap. And this idea that Honda is going to manufacture electric vehicles cheaper and more effectively without massive subsidies, which are just, in my view, not a productive use of government capital, in Ontario or Quebec or any other place, I think was always a fail, like a flawed idea, and it's being exposed in a real way. I don't know how we manufacture. I don't know how we compete with China with EVs. We're going to have to figure out a different way to compete against China, because I think, not saying that we should give up, but man, they are.
I mean, I guess there's the
miles
national
ahead.
security element too.
That okay? So then, but it was never positioned that way. Do you understand?
Yeah.
Nobody. Justin Trudeau didn't stand in front of a podium and go, we have a major military weakness, and we are worried about having to fight a war with China. Ergo, we are doing this thing. He said, climate change. And that was the medicine that was meant to make this pill go down, when we know China emits more CO2 emissions than all of the West combined. So it was always a lie. And so I think it's really kind of fun and sad and funny that it's all being exposed right now. But I don't know how we compete against China on electric vehicles. It's not clear that we should.
Well, Keith, good place to wrap it up. As always, guys, appreciate the support. Again, we will have working on the guest list here over the next several weeks as we ramp up into the election cycle here. Lots of noise out there. We encourage everyone to sort of do their due diligence, and we appreciate you guys tuning in. We'll do our best to continue to advise and discuss all these topics. So we'll see you next week.